Hi everyone, good morning and welcome to today's morning report with me, EURJPY market analyst at Handtech Markets for Tuesday the 5th of August. The European session has started fairly positive actually, and that has been helped certainly by the support that the Wall Street markets had yesterday. An element of calm has returned to these markets, it seems to be in the last 24 hours or so. Um, and you can see that across the board, and the currencies which have basically flat, no real major strength yet for the dollar, which had been a feature of certainly the last few weeks, and certainly last week when you had that big sell-off on equity markets. The dollar strength was a big element to that. But the equity markets in Europe, as I said, basically bouncing quite nicely, and that comes despite the news overnight that China's services PMI data from HSBC dropped to a 9-year low. That was at 50.0, down from 53.1, so a big decline there in the services PMI for China, and that impacted on the Asian markets. But the European markets certainly are focusing more on Wall Street and the Western economies anyway. So it looks like there's more of a bit of support coming through at the moment. In terms of the impact on the dollar, I will show you the dollar index, which, as I said last week, has broken above that 81.3 mark, which had been the big pivot level on the dollar, but it's basically now back to that level, and it'll be interesting to see now if it starts to use that as a pullback support. Just zoom in there, you can see that bang on pullback right to that level of the 81.3 breakout, and as I said, yes, so that could be now being used as a basis of support. So we'll see how this dollar trade moves. The Aussie dollar is fairly well supported today, and that's come after the RBA, Reserve Bank of Australia, has kept rates flat at 2.5%. So no major move there. In terms of the equity markets, a big decline yesterday on the VIX index as an element of calm returned to the markets. So that unwinding a huge rally that we saw in the VIX last week, back to 15. So a big decline in the VIX as a bit of calm returned. In terms of the data that we've got out today, you've got the services PMIs for UK, US. So starting with the UK, it's forecast to come in at 58, which is slightly above the 57.7 from last month. But it's still well below that 62 that we saw towards the end of 2013. But still good numbers there from the UK services PMI sector. Moving into the afternoon at 3 o'clock, we've got the US version, which is the ISM number, and that comes out at 3 o'clock. Forecast to be 56.5, so again, a pretty strong number, pretty indicative of what we've had in the last few months with the decent rise in this ISM data. So, a couple of bits of economic news that should be quite moving of markets, because certainly in the UK, the service sector is around 75% of the economy, and also in the US, the consumers, it's around about 70% of the US economy is consumer driven. So big numbers there, which could have an impact on the certainly on the dollar and also sterling in the case of the UK. My chart of the day is the euro yen though, and this euro, well, the dollar correction that we'd seen on Friday certainly helped to drive a euro rally, and that euro rally is questionable as to whether it's going to continue. It's now certainly on euro yen, and I'll show you in a minute on euro dollar as well. But euro yen is back up into this resistance band. 138 is the top of that band, and it pretty much hit there on Friday. And the last couple of days, it's basically been consolidating around this resistance band, which starts at $1.3765 there or thereabouts. So about 35 pips worth of resistance on euro yen, and it will be interesting to see if it continues. You have got a breakdown of this downtrend on euro yen, so that's a positive. But if you look at these momentum indicators, they're basically just returned back to the levels throughout this sell-off that continually the RSI certainly just rolls over again. So it hasn't been able to breach that, make a breach of that move yet. So is it is it up and hitting the buffers? That is the question. You've got the MACD lines, which is still in negative territory. You could argue that stochastics have got a little bit further to go. Certainly the last two rally highs on the stochastics in June and July continued further. So perhaps a little bit of upside potential in the stochastics. But certainly at the moment you've got this, as I said, this 35 pip resistance band on euro yen. If I'll show you the intraday chart, you also see that on the downside, yesterday's low hit that support pretty much to the pip. That was very good bit of support coming in at 37, around 37.35. So that was the pretty much the low that we saw coming in yesterday. So that is the limit. And if it starts to trade below there, I think that that would suggest that that rally has run out of steam. But certainly at the moment, it's in a bit of a wait and see mode. You've had these momentum indicators on the hourly chart that have unwound quite nicely now. So if it is gonna continue to rally, it can go from here. But my reading of this chart is that if it starts to break down below that 137. 35, I think that that would suggest that this rally is probably coming to an end, and it could well test lower once again. Anyway, I wish you good luck in your trading on euro yen today, and I will speak to you later. Thank you.